How does the lender calculate how much they will lend on a commercial property?
That will be heavily dependent the appraised value. So you're looking at again these third party reports. What the appraised value is one of the governors, and the one that's probably influenced the most right now is not necessarily the loan to value, but sort of the debt coverage of the assets. So you're looking very closely at what that debt service sort of ratio is. Debt service ratio is really dependent on the asset type, the type of product. When I say the asset type, if it's a multifamily product and that's a 1.2 debt service coverage. If it's an industrial building, you're probably 1.25. If it's office, it's 1.3 or higher. And that's sort of asset types that we mentioned earlier with regards to the self storage and student housing. I forgot to mention that we do, you're a little higher debt service coverage of 1.4 when we're looking at these assets conventionally. So the big constraint, most recently due to market conditions with interest rates higher, is unfortunately the debt service coverage. So this is why we kind of heavily look at the asset itself.
What is the typical debt service coverage that the lenders are looking for?
The lenders, most lenders, again, depending on the asset type, that really determines sort of the minimum debt service requirements they're looking for. And maybe I'll reference CMHC. They and their sort of new product MLI, they'll go down to a 1.1 debt service coverage on an apartment building. That's on MLI Select, sort of new construction. To I will call it term debt. If it's a 10-year deal, CMHC insured, it's 1.2 times. If it's a 5-year deal, it's 1.3 times. So those are just CMHC references. And if we're looking at conventional references, then I'll reference back. So multifamily would be sort of 1.2 to 1.25. Industrial properties will be sort of 1.25. Office 1.3 to 1.4. And retail is sort of 1.25.